afternoon, ladies and gentlemen, excellencies, and a very warm welcome to this EBRD panel on value chains to boost trade opportunities. I'm Melinda Crane, Senior Political Analyst at Deutsche Welle, and it is a great pleasure to accompany you today as moderator. As you well know, ladies and gentlemen, Central Asia has a rich trading history lying between Asia and European markets that account for 2/3 of global GDP and trade flows. Yet value chains in this region remain underdeveloped, hampering emerging economies and limiting opportunities for firms. In alignment with the overarching theme of this year's EBRD annual meeting and business forum, namely investing in resilience, we'll be asking how countries, firms, and international institutions can best address these challenges and how the EBRD can support that effort. Our panel brings together leading stakeholders to discuss not only the challenges to better supply chain development and integration, but also solutions that can support SMEs, in particular in obtaining finance, upgrading standards, including ESG standards, and accessing new markets. We have a great group of leaders here to discuss all of those topics. I'll introduce them in just a moment, but first, just a few hints on technology and logistics. We do have translation available for those who wish it on their headphones, if you're with us here in the hall, or if you're with us online, and I'd like to say a very warm welcome to our live stream audience, then you can access translation via our Interactio app. We're also very eager to get your input, ladies and gentlemen, and you can do that using our Slido tool. In a moment, we're going to be asking for your thoughts on today's topic, and you will be able to do that by going to slido.com or the Slido app and entering the code 1595844. And once you've done that, you need to click on the name of this session, which is Integrating Value Chains to Boost Trade Opportunities. Then you can submit a question or take part in the audience poll that I'm going to read off in just a moment. And by the way, if you're here live in the room, on the back of your seats is a barcode that you can also point your phone at, and that will take you to Slido very quickly and easily. So to get us started, we want to get your take, dear ladies and gentlemen, on the following question. Please answer it on the Slido app. The question is this: what are the biggest challenges that suppliers are facing when it comes to integrating into global or domestic value chains? And that will generate a word cloud, so just type in the first word or words that come to mind when you read the question. And we'll come back to the results in just a moment. First, it's my great pleasure to introduce our panel. And I start here, seated next to me, with Pervez Hamid Hussein Dalla. He's Managing Director of Global Head of Payables at Citigroup, which is active in the region and seeks to support supply chain development with financial instruments and programs encouraging also uptake of standards. Great to have you with us, Pervez. Seated next to Pervez is Ruud Pedersen. He is CFO of Corsinca. You've probably seen the Corsinca signs if you've driven around the city or the region a bit. It is one of the largest supermarket chains here in Uzbekistan, working with numerous smaller suppliers. Great to have you with us. And then I'm very pleased to introduce Tornika Sirakashvili. He is Deputy CEO of Enterprise Georgia, which promotes access to finance and development support for SMEs. And finally, a pleasure to welcome Paolo Monaco. He is Director of SME Finance and Development at the EBRD with very extensive experience in the Central Asian region. So let's see that word cloud result. Hopefully we've got a few entries on that. I'm going to see if the technical team can put it up on the screen. Okay. I'm seeing, yes, here we go. Standards and logistics, very clearly very central for many of those who responded. Then in smaller print, we have financing, access to finance, size, scale, trade barriers, supply chain disruptions, bureaucracy, certification, know-how, freshness preservation, cool chains, very interesting, and information. So quite a range of challenges there. Let's now see how our panel sees it. And I'd like to ask all of you, if you would please share your take on those results. To what degree do they conform to the value chain challenges that you yourselves are either observing or directly experiencing, also in conjunction with recent developments, with the disruptions brought about by the pandemic, rising geopolitical tensions, and the increasing need to comply with standards. And I'll just go straight down the panel, starting with Pavez.
Well, thank you very much. Good morning. Good afternoon, everybody. I think it's a known fact that in the last 3 years, we have seen the highest disruption in the supply chain globally. Geopolitical issues are the recent one, but COVID has really redefined the global supply chain standards. And the well-decided, well-thought strategy of procurement for many years is now redefined. And it's currently being redefined. So there is no one magical word which used to be just in time has been replaced by just in place, nearshoring, offshoring, all these words we are seeing it. And the suppliers are the one which has burned the maximum pain of being shifting from one buyer to another buyer to different geographies and different standards and different visibility of the data, the ease of connectivity. The whole financing is an integral part of the value chain. It's not separate when you look at the supply chain. And the service providers which has the digital connectivity, which has a global presence, which are able to communicate to the supplier and reach the last mile at a click of a button, are the most successful, I would say, the platforms which will deliver the end results for the supplier. You need to take a step back and think about, during COVID, the financial disruption has the highest impact from a cost perspective when they were procuring and selling goods to the large buyers. And if the cost could be curtailed and if the financing is delivered in a resilient way, the whole supply chain could be much more smoother, easier, faster, quicker, and visible to the buyer. So I would say, yes, this is going to be evolving in the next 2-3 years, but I think we are behind, in my mind, the worst time of our era.
Thank you very much. And I'll go straight on to Rud, and I'll just call everybody's attention to the fact that word cloud is still developing. We've now got logistics and infrastructure quite central as well. So Rud, your thoughts and your experiences?
Well, I would say I'm not surprised by the fact that it's logistics, standards, infrastructure which is standing out. Perhaps because these are all practical and operational issues that everyone has been facing due to some of the disruptions in the supply chain. Where I perhaps is a little bit surprised is that access to finance is relatively small. And especially if I look at the supplier base of our company, small and medium-sized enterprises in Uzbekistan or in adjacent markets, I would expect if we asked them that access to finance would be one of their key concerns.
Thank you very much. And on to Tornika.
Thank you again for such a great event. I have to agree with my colleagues for sure. I was also surprised to see access to finance being on such a lower level than logistics, because the usual way we see this hierarchy is access to finance usually comes first, standards come second, and then the logistical challenges, because that's the way SMEs evolve. They can get financing to access domestic markets, they can get standards to access international markets, and afterwards they're faced with logistical challenges which they want to fix. And I think this speaks more about how much of an issue and a global challenge we're now going through, because it has become so apparent for SMEs that even if they're able to fix financing, if they're able to fix standards, they can still not fix logistical issues which are much more global than just their irregular environment for them.
And perhaps not coincidentally, that order that you just referred to is exactly the order in which we will now dive deeper shortly into some of these challenges. But I would perhaps point out that finance is essentially also part of size and scale. Finance is, of course, also related to digitalization, cool chains, ensuring quality. Finance is essentially a facilitator and enabler for many of the other items that we do see up there on the screen. Paolo, finally, your thoughts also, of course, on the key challenges that you're seeing.
Hello? Yeah, thank you very much, Melinda. No, I mean, don't want to repeat what's already been said, but I think maybe in the audience there is a financing bias. I mean, a lot of people probably works in financing institutions, so from their perspective, they spend 12 hours a day giving financing. They don't really see lack of financing as a...
Okay, I'm happy to say financing just got bigger.
yeah. So as a big issue. There is one more that is not listed there, or at least I cannot see it, which is the one-off cost that a company needs to invest in order to enter a supply chain. And that sometimes it can be a one-year project or a 2 years project, and really sort of requires quite a lot of commitment. Again, probably one more to be added there.
Thank you very much. And we will now take a deeper dive. And I'd like to begin by talking about access to finance and what that means. And it obviously is crucial for funding not only production capacity, but also as a source of working capital for scaling future production. Therefore, that link to size that I mentioned. Paolo, could you get us started by talking about some of the bank's findings on the degree to which firms, and especially SMEs, do face obstacles in gaining access to value chain finance, and perhaps also the underlying causes for that?
With pleasure. What you see on the screens are the results of surveys that EBRD regularly runs amongst SMEs, and what you see in there is really significant. So if you take Central Asia as an example, you see that most of the financing that they actually utilize is internal cash flows when they have it. And even if you go to a more benign, let's call it like that, jurisdiction where there is more access to finance, Southern and Eastern Mediterranean, you still see that the number is really very, very small in terms of utilization of other means of financing. And we're talking banks, non-banks, and advances from customers, and trying to delay as much as possible the payments of your suppliers. You kind of, looking at the graph, you kind of answer whether you kind of believe that maybe the answer as to how to finance SMEs is not in there. It's something that is yet to be discovered. It's probably under other sources, because I don't think you can bridge such a gap anytime soon. But perhaps we can look maybe at the reason as to why that is happening. And that's also from the surveys. This is why SMEs don't take loans. Okay, you have a few outliners. You see Turkey, SMEs don't want to take financing because it costs too much money. Interest rates are too high, although probably they would have been reversing over the past couple of years. But then you find in there all the usual suspects. I know the process took too long. The financing institution asked for too much capital, personal assets, uncertainty of the process. Actually, that's not in there, but maturity was too short. When you look at all those reasons, I'm a little biased because I'm a firm believer in supply chain financing and reverse factoring. Actually, that product resolves the totality of those issues. Only thing is short-term maturity, but then again, that's a working capital solution, so it doesn't fit longer-term investments. And I don't think But last thing I'd say, as part of the survey, we also run some data to try and understand the correlation between increasing environmental standards and integration into supply chains. And surprise, surprise, what you find is that those SMEs that have higher environmental standards are also the ones that are more integrated, which tells you one or two things. Either the buyer is pushing for those requirements, or the companies that don't have good standards, they cannot integrate. So it's a big and complicated issue, and I don't think we're anywhere close to solving it.
Let me suggest that we take standards a little bit later and come back to that point, but now concentrate some more on the finance piece. And I'll go to Rud, if I may, to talk a little bit about yours and Corsinca's experience, also in terms of your smaller suppliers. What kind of financing options are they looking for, and are they perhaps having trouble accessing? And what would most help them when it comes to financing in terms of scaling their production and integrating into value chains?
What we see in Corsinca is that there is a willingness amongst our suppliers to grow together with...
One second, Rud. I'm going to ask if we can boost your sound. Is it possible to get the sound up a bit? Thank you.
All right. What we see in Corsinca is that there is a willingness amongst our suppliers to grow together with a company, but the access to finance is a challenge. Very often, if you want to have bank lending, then you need to collateralize, and often the companies do not necessarily have the balance sheet to support that. That's number one. Number two, it's not a simple process to go through collateralization to get access to your funding. And even if you do that, typically you would find in a market like here in Uzbekistan, where your borrowing rate would be on the other side of 20%. So the cost of borrowing is very high. To my knowledge, today there does not exist any platform for supply of financing. I know many of the institutions are looking at it, and I do believe this is one of the good opportunities. Because in such a case, first of all, you don't have to collateralize, and secondly, we as a large and a financially stable company, we can offer the strength of our balance sheet to our suppliers, which gives a unique opportunity and a benefit in the sense that the financial institutions, they will look to us and our financial standing when they offer to extend lending on invoices to suppliers.
Thank you. And I'll jump over to Tornica, if I may, to also speak from the perspective of Enterprise Georgia and the SMEs that you are working with. How can you help them to overcome financing obstacles, and what can you offer them, and who are your most important international partners perhaps in doing that?
Sure. I mean, it definitely is a gap that is very hard to fill, and it's a dynamic gap, so it changes over time. So one thing that we did, which was different, is you find the usual suspects, as was mentioned. It's a loan co-financing, it's a credit guarantee mechanisms that you need, and it's a grants mechanisms that you need. What we did differently is we tried to combine them in a way where it starts to work for SMEs. Just to give an example, instead of just issuing co-financing for loans at a standard rate, we tied it to the refinancing rate. So that means that as the refinancing rate goes up, so does our co-financing, and as the refinancing rate goes down, so does our co-financing goes down as well. So we make it where it's almost a standard low rate for all the SMEs. We did the same thing on credit guarantee schemes and collateral guarantees for SMEs, is that wherever they use our mechanisms, the SME is only in charge to have 20 to 30% collateral on their side, as our collateral guarantee will go up or go down with the requirements of the bank. And thirdly, for some specific sectors where we see a lot of potential, instead of just providing co-financing and guarantees, we also add a small grant on top of it, just to enable them to be liquid whenever their need arises, because as soon as you get a loan, naturally comes its own responsibilities and obligations. So we don't want them to fail that loan, so we provide initial liquidity to them right away so they're comfortable with what they're doing. So for us, the main idea is how do we make it a stable environment where no matter what's going on in the ecosystem, their reality doesn't change significantly.
May I just ask you, and maybe Rud also wants to comment on this, awareness, the degree to which local, smaller suppliers actually are aware of what kind of support might be out there in terms of financing, and whether you do very active outreach to reach them and let them know?
On our side, it definitely is a very strong point to make that we're out there, we're raising awareness about the products, but I think the biggest partners we have are the banks. We're fully integrated into banks, so even if an SME is not aware of our products, as soon as they land at any bank, the bank is our front office to offer them this type of support, and I don't need to interact directly with the SMEs. And I might end up with a prospective beneficiary through the bank without interacting with the beneficiary at all. So on our side, we make it where the bureaucracy is cut to almost zero, and a piece of a new product or a new partner lands on my desk without me interacting with them at all. And that is how we want it to be, because for us, again, the main point of our existence is making it possible for businesses to succeed, not that we are the main dominant individuals.
Ruud, yeah.
Yeah, I think you touch upon a very important point. Supplier financing is only emerging in Uzbekistan today, and hence the awareness is not existing. I believe we, as a major buyer in the country, we play an important role, because we have daily communication with suppliers, we have direct access, and as it is in a mutual interest to see our suppliers grow together with a company, we are playing an important role in terms of educating our suppliers, making information about supplier financing available.
Thank you very much. And I'll go now, if I may, to Parvez. And I mentioned the fact that Citigroup is working in this space. So perhaps you can share a few concrete examples of the way that you are supporting development of supply chain networks that do also integrate SMEs.
No, first of all, I'm not surprised with the results that Pablo mentioned about only 12% financing is supported by the banks and non-banks put together. And I think the entry barrier of unfavorable rates and complex process, that ranges from 8 to 48%. But I think I agree with Ruud that, if we can leverage a better rating of the value chain between buyer and supplier, and if the buyer is a strong rated company, and if we can leverage that credit and give the financing to the supplier, it just becomes a lot more efficient in the process, because there are two counterparties. The bank starts looking at suppliers, individual financials, and they may not stack up to give the amount of money they would require to supply goods and services. And it could vary from seasonality to the requirement of a large procurement order, and that may become a very big roadblock for the supplier to produce the goods and supply on the time. And hence, supply chain finance is a very effective tool, and I'm very glad Ruud mentioned that is a very efficient way of deploying funding to the suppliers at an attractive rate. Now, we operate it on a globally, around 122 countries offer supply chain finance, and I think that proves that this has a lot more requirement in countries like Uzbekistan and developing economies, because that is where the most of the money is needed for the supplier at a grassroots level to have that kind of a GDP growth at a grassroots level. And I think the supply chain also has its own advantages, that it creates transparency, it creates resilience. To earlier point, it is digitized by us, so there is one single platform across all the locations except for Latin America. We operate on one single platform connecting buyers and suppliers. And I think the education part, we take equal participation in educating suppliers that this actually is very beneficial. For suppliers, it is without recourse financing. So it does not provide liquidity, but for us, when we offer, it also provides without recourse to the supplier. Because we are not taking performance risk of the supplier. We are taking the payment risk of a large reputed buyer in the value chain, and that is how we leverage the credit. Now, the second element is the sustainability. And I think we are going into the next topic on sustainability, but I would say that has become a very integral part of the value chain when you look at the supply chain finance, because earlier, most of the large corporates, when they were buying plant and machineries and other equipment, capital equipment, they will look at the sustainability standards. And now they started looking at the working capital flows and saying, how do we embed that into our day-to-day DNA so that my counterparties and my supplier are also compliant to the sustainable standard. So yes, there is more work to be done in countries, and that is why we are partnering with EBRD as our value-added partner. They have a lot of deep penetrations in such markets and understanding. And with our platform and our capability, I think it's a win-win situation for us.
Thank you very much, and I will jump back to EBRD and Paulo. And Paulo, I've been thinking as we talked about awareness and financial literacy, essentially, I was thinking about the small box on your graph that was, it was in black, and I think it was that people actually thought they wouldn't qualify and therefore didn't even bother to apply. So when you tell us something about what EBRD is doing and perhaps share a few success stories, I wonder if you can also please speak to that point of outreach and essentially education, because clearly there are some who aren't being integrated simply because they think they wouldn't qualify or because they assume rates and maturities won't suit them. It's on. It's on.
Yeah, thank you, Melinda. No, look, as EBRD, we are a different institution. We are an IFI, and we should behave differently. And when it comes to supply chain financing, I think our mandate is twofold. Number one is participating in the market and be present. But number two, when the market doesn't exist, that is something that we need to develop. So that time investment is on us and other IFIs as well, and we should continue to cooperate. And I will answer the question, but the first thing that we need to do is we need to embrace the product. And actually that is something that we've only been doing since last year. So we are at the beginning of our journey. But as it often happens when you're a latecomer, you're also very determined to make it to the top. And when it comes to education, it comes in two buckets. Number one, obviously we have a great pulling effect once we put our weight behind the product in certain countries. And that is very helpful when it comes to regulators, when it comes to regulations, and making sure that there is an enabling environment, and that also includes the local PFIs. And then there is the other side of the coin, which is the work that we do every year with suppliers and SMEs. We have an entire line of business, and it's a very large line of business that is dedicated to increasing the standards of the suppliers so that they can have the opportunity to integrate in value chains. And that is a very big line of business for us. We're moving from just doing it face-to-face to also adding an SME university, to being able to do the things digitally, to increase the outreach that we have towards the SME community. And that is the educational part that we've been doing. I cannot tell you success stories just because we have too many. Every year we work with 3,000 SMEs, so I will be doing a disservice to the 2,999 that I don't quote. The last thing I'd say is, while we are a latecomer, we should also continue to focus on product innovation within supply chain financing, working with our partner at Citi in order to be able to develop new products such as deep-tier supply chain financing and the integration of ESG standards into supply chain financing.
I want to come back to standards in a minute, but Parvez has whispered to me that he does have some examples to share, so please.
So we have already executed a transaction in partnership with EBRD on sustainability for a company called Metso that we talked about in today morning, where SBTi is certifying suppliers in Turkey to their carbon emission goals. And we are offering higher discounts and educational session on how the suppliers could be equipped to deliver carbon emissions. So that's a very good example which we executed. We got the Adam Smith Award for the transaction, and this is just the beginning of many more to come. On a globally, we have many such cases in Citi where we would have partnered with a company and we reached supplier in all the locations. So if a company is based in, say, Netherlands, and if the supplier in Uzbekistan, we would be able to provide that financing as well on our platform.
Thank you very much. I'd like to take that deeper dive now on standards, and perhaps just to come back to a couple of the terms that we saw on the word cloud. They also included reliability and predictability were some of the terms that we saw on that word cloud. And that too, those terms are very much linked to what we are now seeing in terms of demands for compliance with standards, whether they are related to customer preferences or to buyers' rules. Compliance is becoming an increasingly important prerequisite for participation in global value chains, and EBRD evidence shows that companies in some regions tend to lag behind in terms of perceptions of suppliers' reliability. We see some very wide regional variations there. And we can see it up here on the graph, essentially perceived reliability of suppliers varying significantly across regions, with former Soviet Union countries, including Baltic countries, at the lower end of that reliability scale. So perhaps we can now talk about that trust part of the question, trust, predictability, reliability, and how that relates to standards compliance. And I'd like again to start with the companies, as it were, with Rud and Korzinka, to talk about your own experience, the degree to which your suppliers are being hampered by compliance demands, and then also what you are able to do to help them.
Very good question. I think our suppliers are very willing to take the journey, but I believe they, at times, they lack the insight into where the journey will take them and what is required from their side. So an understanding of standards, an understanding of expectations. Again, we as a company and as a large buyer, we work closely together with our suppliers to explain, to educate each other, to set expectations on the standards to be met. We see great interest from suppliers and a willingness. The capability is perhaps where we are lacking behind, and that's a journey we have to take as a buyer together with our suppliers.
Thank you very much. And over to Tornika, if I may.
For me, the way we look at it is financing and standards go along with each other. I mean, you cannot really do much without the other one coming into play. For us, we look at this as phase one. This is like buying a ticket to fly, pretty much. The quicker I can get the companies to get the right financing in place and to get the right standards in place, the quicker I get them accessibility to wherever they need. I think the interesting factor, what was just mentioned as well, is awareness and understanding education about standards, because we've seen where companies are much closer to standards that actually need to be able to qualify, and they think they're much more further away and they're not willing to take the plunge. So in this case, sometimes we incentivize the companies with grants or other types of means just to push them through that a bit of an edge to make sure that they comply, and sometimes they're even themselves surprised how easy they're able to reach some of these standards or qualifications. I think the key challenge comes in is that as Georgia, Uzbekistan, and other countries, especially in the former Soviet Union, we're dealt in a different domestic environment where these standards might not be required, so awareness and understanding of them is limited and low, and I think that's a big challenge for us to overcome with this SMEs.
Awareness and understanding is not only limited in this region, I think, but in many. ESG, for example, is a very big and not always very specific term. Of those three, environment, social, and governance, what would you say is most complicated for regional companies? And I'll go back to Rud with the same question, essentially, because if we again think back to the word cloud, it included issues like corruption, which of course is the G, and sometimes the S in ESG. So where is the journey particularly difficult, perhaps, for local companies? I was going to start with Tornika and then come back to you, Ruud. Sorry.
Sure thing. For us, definitely social and environmental are the bigger challenges. I think environmental comes in at the top of the list because social you can more or less manage internally and do other things. Environmental usually is the one that we have to press companies on going forward with this as well. And again, EBRD and other IFAs have been doing a great job alongside with us to try to make sure the companies are adhering to some of this higher level qualifications.
Thank you. Ruud?
I would agree. I would agree to that. Environmental is the first challenge, partly because it also has a longer term element, which is not necessarily understandable when you're negotiating this year's supplier contract. Social would be number 2 for sure.
Social meaning exactly what in that case?
It's the social responsibility that we all have as actors in the society and in the economy, both towards stakeholders which perhaps can be easily influenced, or that has on which we have an immediate impact. Governance, I think, is the easier part to explain, perhaps equally sometimes difficult to execute.
And how are you conveying your expectations to your supply chain participants?
It happens as part of the ongoing dialogue, the negotiations we have with suppliers. It's our relationship with suppliers is not one where we just talk to them once per year and then we place orders. We have an ongoing dialogue. Standards move. Expectations are increasing. Expectation on us as a retailer to be able to say trace the products back to origin is a dialogue you need to have with the suppliers as well. So it's an ongoing effort on both sides.
Thank you. Paolo wanted to weigh in, and then I'll come to Pavés as well. So the International Financial Institutions point of view, please.
Yeah, that too. But I wanted to politely disagree. I think environmental is by far the easiest one, and that is for 2 reasons. Reason number 1 is mostly measurable, and that's a big plus. And reason number 2, you have the whole world focus on it, and therefore you have a lot of pressure. And people do things because they think that things are correct, but people also do things because they must do things, and I think the latter is what is happening now. Governance is the one that is invisible. Governance is just the way that you run your company. And no one exactly knows it unless you're inside the company. So there is much less visibility, much less pressure on it. And how do you measure it? Impossible. So I think that would be the challenge. It's also a pity because governance is the one that drives the other 2 letters and many other letters that will become important over the years, because I'm sure that there are other letters they were today forgetting because the E is just so powerful. Sorry, yes, the E.
Thank you very much. And then over to Pavés, and perhaps you can also talk about how you work with borrowers also to incentivize compliance or to take them, help them, support them on what is clearly a journey toward complying with standards.
I think, there are steps in which you have to drive. So this is like a scope 3 in the assessment, because scope 1 is when you are doing your own investment and determining what you need to invest, where you need to invest, and how eco-friendly or environmental friendly your company wants to become. Scope 2 would be the direct impact on large strategic procurement, etc. Scope 3 are the suppliers, which are universe, which is very diverse, which is very difficult to have the visibility end-to-end and look into detail on their operations. And we are talking about supplier finance. So supplier finance is a gateway to bring that universe into a visible infrastructure. And supplier finance does leverage the buyer rating and provide them cheaper financing. So that's a very good incentive for the suppliers to take the money and come on the platform. Once they are on that platform, you then introduce the sustainability standards, which are measurable and transparently tracked, and it has to have a maturity profile to renew them. These are not perpetual certification. So once you are qualifying a supplier to be carbon free, you need to reassess it after a year whether they are still carbon free or they have adopted a method or a technology of a production which are now deteriorated. So once they are on the supply chain finance platform, then you can further incentivize them to adopt the standards which the buyer would like to see from a, I would say, from an environmental perspective. That's very easily measurable, and I agree with Paulo, because then we can deploy agencies which will go and do either the field inspections or put up questionnaires and ask them specific questions to determine their standards of operations and then rate them as per the standard. So that's a starting point. And then how are they moving in the direction to reduce either the carbon footprint or emission or any other standards. On the social front, we do track some of the social parameters like a woman-owned entrepreneurs, minority-owned businesses and stuff like that. But that's the only few parameters that we look at it from a social governance perspective. The governance part is the most difficult one, because you can have an anti-bribery clause, you can have a no child labor clause, etc., etc. But in the reality, when you go and measure it, it becomes harder to determine whether they actually adopt that standards and are they operating it. But we have to bring them on a platform of transparency. We have to bring them on a platform of confidence that it will be resilient, it will be beneficial, it will be from a long-term perspective accretive to them. And once you have that education done, then I think it becomes a step one. Then you keep monitoring and keep delivering the sustainability standards over a period of time. When you incentivize, you need partners like EBRD who have the social and environmental goals to deploy 50% of the funding by 2025 in the green financing. And that is where the incentive will go into the wider, universe of the society.
Thanks very much. I know Ruud also wanted to comment, and please also comment on this this point about this mild and polite disagreement, as Paolo referred to it, between the E and the S and the G, because I also wonder, viewed from the perspective of a supplier, the degree to which there's actual pressure on the S and the G, or whether they, in a way, are so vague and so lacking in amenability of measurement that for many it's kind of a side aspect.
Thank you. Well, what I wanted to comment was exactly that point. I think it depends on where you're looking from. I think when you are putting the E in a different place, as I heard my fellow panelists, I think it's because they're looking at it from a policy point of view. Whereas if you're looking at it from a very practical point of view, our suppliers, small and medium-sized enterprises, it's their livelihood. It's their livelihood. It's how they make a living. It's how they put food on the table, which means they do not necessarily think about the fact that there is wastewater or there is an environmental impact. And which is why I believe it is the most important one. From a policy point of view, I can understand where my colleagues are coming from. But when you're sitting in front of a supplier, then I do believe the E is much more difficult to deal with.
And I think if you go deeper into the value chain, it becomes more and more difficult. If you are dealing with a very small supplier, I think he would not be worried about how much electricity is burning. He would require the bread on the table. I think that's a very valid point, Ruda, you're mentioning. So the more deeper you go, the more, and it also changes from location to location, to the industry to industry, to the supplier to supplier. So yes, I think that variations, one has to have it in the complexity of the things that you want to achieve.
Absolutely.
Thank you very much. Ladies and gentlemen, I am eager to take questions, but at the moment we don't have many on our Slido app. So let me ask if there are live questions in the room. Anyone? On any of the points that we are discussing here? So it looks to me as if either there is general consensus that the panel's input is so interesting that people don't want to pose their own questions. I have one here that has come in, namely, how can we integrate value chains in small countries where not many corporates exist? Anyone? Please.
I'll take that one. Yeah, especially with Georgia, I mean, it's only a population of 3.7 million people. So right off the bat, when we look at Georgian companies, they're going to be small in comparison to the scale that we're looking at, especially Europe, right? They all want to reach European markets, and what it would take as a large company in Georgia will be at most an SME in anywhere else in the world, or mostly in Europe as well. So for us, the key challenge there is that what we try to do is be a bit more creative about how we support them rather than before. Like, I'll give you an example. Something that other countries don't do, we actually hired representative offices abroad, companies which we don't name and we don't necessarily publicize, but they're working on our behalf to put in contracts for Georgian SMEs, and we pay a small commission fee for that kind of supply. So I'm trying to kind of manage and kind of create less costs on them finding potential buyers in other markets, because they have the products, they have the standards, naturally they're going to be less competitive on edges, so I'll try to find points where I make them more competitive. The same thing for logistical purposes, right? If my export growth is linear, and it's always going to be that way, my logistical infrastructure growth is going to be more staircase-wise, right? So it's not going to be able to catch up with it as quickly as it's going. So I try to find other creative means. So let's say one of the things we're discussing is, can I put in logistical hubs in some of the areas where my exports are large, kind of incentivize companies on a lower cost to use those logistical centers, so I'm cutting the cost to them to be able to be present on those markets.
And I have a couple more that have come in now. How can we use supply chain to support companies that need it most, for example, in Ukraine? Anyone have any thoughts on that? Pavez?
So we do offer supply finance in Ukraine for the suppliers which are based in Ukraine and for the buyers which are also based in Ukraine. And this, more so, if there are suppliers in Ukraine supplying it to the global companies, we do have a product up and running and offering that services, so they can certainly avail it. The challenge comes when the supplier is unaware of this facility offered by the buyer. And I think that's an educational session that the buyer has to sponsor along with the financing partner to go to all the suppliers. And there are no entry barriers as far as we are aware of it. And obviously that kind of delivers the usage of the product in the country.
Mm-hmm. Paolo?
You know, obviously it's a very difficult question to answer, but I think, again, from our perspective, partnering with banks like Citi on the IFI side, we should provide and we must provide risk mitigation tools in order to take risks that are otherwise too large to take, particularly when we're talking about domestic value chain. And I think that is the work that we need to do, because at the end of the day, if the risk is too much and no one wants to, or very few people want to take it, we must intervene. So, and that's again not just our bank, but working together with our donors. And so far they've been very interested in supporting domestic trade in situations like the Ukraine.
We also have a question that essentially relates to the term size that we saw in our initial word cloud, size and scale. And the question is this: how can we get more smaller companies into supply chains? Is there always a preference for medium-sized and larger suppliers? Rud, do you work with some very small entities, or would you say that is too complicated for us? We prefer the medium and larger.
We would very much like to work with small and very small suppliers as well. I think we have a number of hurdles that we have to get across, and I think it was mentioned before. One is we need a platform. If it is paper-based, if it has to be hand-carried, stamped and signed, then it will not work, both because of the time lag, but also because small suppliers do not have the administrative support to actually do that. So a platform to facilitate it definitely would be an enabler in this sense. The other part is it has to be very simple. It has to be something where, when you as a small business, you don't have to spend a lot of time to understand the essence of what it actually is offering supplier finance. And it comes a little bit back to what we talked about education, etc. So for us, as a large buyer, it definitely would be interesting to work with small or very small suppliers as well. But there are some prerequisites that has to be provided in order for them to be able to tap into a financing source like this.
Mm-hmm. And by the way, other comments on that size? Yes, please.
Yeah, I think you have to support them growth. I mean, that's the only real prospect to joining some of this international value chains. So for us, if we look at our menu of support mechanisms, the smaller they are, the more products we provide, and the larger they get, the narrowing of the products happens. So I think that's the only way out of that one.
Then I have another question also relating to size, but essentially the other way around. So I'm going to go back to Ruud on this one. Large buyers can have power over suppliers, especially when there's market concentration. Is there a risk that supply chain finance gives even more power to buyers?
I would think not. And it comes back to what I said before, that through supplier finance, what we offer is the financial strength of our balance sheet. But other than that, it's not something that we would actively use. We would actually prefer to take a step back and say the relationship otherwise is between the bank or the financial institution and the supplier. But what we provide is the balance sheet to back that. Also because it gives less administration to us as a buyer. Hence, I would not see that as an immediate issue.
Thanks.
And I would add to that, because the supplier finance is offered at the discretion of the supplier. So the supplier has the discretion whether he wants to get the money earlier or not, or wait till the end of the period to get the money from the buyer. So the key to join, key to get money, key to get financing is given to the supplier. So there is no control that the buyer has it, because it's an arm's length basis the transaction is executed. The buyer gives the credit support, and then supplier comes on a platform and elect to discount his invoices as and when he chooses to do. So I think...
Thank you. And Paolo, you also were shaking your head.
No, I was shaking it because, sorry guys, I was shaking it because, yeah, absolutely not. In fact, the complete opposite. Supply chain financing does only provide an option and an opportunity, and in fact gives away some of that power. So, yeah, that's why I was shaking the head.
I also have a question that I must confess I don't fully grasp, but perhaps you will, dear panelists. So the question is this: what is the real potential of middle corridor? Go ahead.
Yeah, I think I got that one as well.
Sorry, we'll wait till your sound is up. Thank you.
Is it on now? Yeah. I think with the current situation in the world, the middle corridor, as we would call it, is the path that runs through China, through the Central Asian countries, and through Georgia as well. One thing that we have seen is, especially within the recent year or so, is dramatic growth in terms of this transportation hub and what we're seeing in terms of logistical path through Georgia as well. We've seen a growth of over 20% in the goods that are transported through this route, and I think the key challenge there is how do we make this sustainable? I mean, because of current events, naturally this route is becoming very popular. Now, when all of the things will be stabilized, you know, where will be the placement of this hub in the future? So I think the key idea of what we're doing and what other countries on this corridor are doing is working together to make it a sustainable and a future route which will be a competitive area, because it needs to pass through different jurisdictions. It does have its own constraints, so we can definitely do that.
Then that would have been my educated guess, but I'm very glad to have it confirmed. Let's spend the last few minutes then talking about what was a very big part of our original word cloud, namely geopolitics and geopolitical shifts. And I thought one of the interesting points that came out in yesterday's high-level panel on connectivity is the degree to which we're seeing different and enhanced regional patterns of trade and integration now in Central Asia, partly due to the geopolitical changes. And I wonder if some of you can speak to that also in terms of supply chains. It was mentioned, for example, by the Uzbek participant on the panel that the new ties now with Kazakhstan are changing patterns of trade in the region. So anybody who wants to perhaps share a thought on geopolitics and how that is impacting regional supply chains, please.
Maybe just to say, again, very complicated question, I think it could do for a panel of its own, but I think over the past 10 years we've seen the geopolitical climate changing very, very quickly, with reversal of previous positions happening within 2 years. And just to say, I'm really not the manufacturer or the person that knows a lot about running a business, but it does take a lot of time to change your supply chain, just understanding who to trust, who not to trust, initiating relationship with the suppliers. So I think we are yet to see some of the effects of the latest geopolitical changes that have happened, assuming that they would last in time. So there is a bit of a gap there, and it's not a fast reaction.
Thank you very much. Others want to share a thought?
No, I think the only thing that I would add here is the entire digitization. To root point, if there are papers floating around, either in a country, and then if geopolitical situation forces to shift the supply chain from one location to another or from one buyer to another, if you have a digitized flow, and if you have the visibility, then I think that could be facilitated in shifting gears and able to have the resilience in the supply chain. So,
thank you very much. Then we have just a few minutes left, and I'd like to give everybody a chance to just perhaps share one or two closing thoughts as you look to the future of supply chain, value chain integration in this region. What would be for you the absolute priorities for essentially boosting both development and integration of value chains? I'll go straight down the panel and end with the EBRD. I'll go to you last, Paolo. Parvez.
So I think this is, I would say, awareness that has been created around the globe of the programs and facilities and digitization is a very good start. The sustainability and the COVID has fast-tracked what we could have done in the 10 years. We have already achieved in the last 2-3 years. And the geopolitical situation has further flared up the global financer to digitize and put a technology and embed sustainability into their day-to-day discussion. We never had this discussion 5 years back on bringing sustainability into supply chain or digitizing end-to-end the entire flow. Today we are at that stage, and I think the journey has just started. There is a lot more work to be done. In my mind, we are just covering 10% of the universe requirement. Globally also, it's much 10% penetrated. So both in the region and globally, I think the numbers are more or less the same. So there's a more 90% area to be covered. And that is where you go deeper into the value chain and not to remain at a first-tier supplier. One of the things that has happened because of COVID and geopolitical situation, there is a second-tier supplier which has been emerged, because not the first-tier supplier are always the producer. And that is where I think the banks like us have to look at the value chain end-to-end rather than staying at the top.
Thank you. Rud?
As a company that has a large and diverse supplier base, I would say I believe there is an unmet demand today, and hence from my point of view, it's the key here is let's get practical, let's get the tools implemented, let's get an offer on the table that we can work with our suppliers on, whether that is big, small, or medium-sized, or even very small. So they get something concrete on the table that we can use. We need a few success cases as key drivers for this really to be something that can grow and become a source of financing for our suppliers.
Thank you. Tonika?
From our perspective and from support perspective, I mean, this is very unorthodox times we're living in. So being versatile, flexible, and let's say offering some of the support mechanisms that we would not even consider a few years back, I think the key going forward. Until things stabilize, I mean, we're not going to know exactly how deep this runs between the sectors. So for us, being as open as possible and with limited resources that we have, supporting as much as it is viable, I think for the nearest future, that's the key goal and key idea.
Thank you very much. And last word to Paolo, please.
Yeah, I think the example that we just quoted before, the work that we did together with Citi on sustainable supply chain financing will become, over the next few years, more of a norm. May not take the totality of the market, but will definitely gain market share. I don't think we're yet at the stage where we have bad money and good money. But we're at the stage where, as a financial institution, we cannot just provide just money, and we have to provide money with some degree of knowledge or risk mitigation that will decrease negative externalities. So, in a way, we will have better money. I think this is where we're going.
Thank you very, very much to all of you. Let us please give our speakers a very warm round of applause, ladies and gentlemen. And thank you so much to all in the audience for your attention and also for your participation, for your questions that did make their way onto my iPad. Much appreciated. I wish everyone a good afternoon on day 3 of this annual meeting and hope that our paths cross again in future. So goodbye and thank you.